Hello and welcome to our weekly market roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Last week, global markets presented a varied landscape as economic data, corporate earnings, and geopolitical factors drove notable shifts across key indices. Here's a look at the week's main developments and an overview of upcoming events. US equities faced a volatile week, with the S&P 500, Nasdaq, and Dow Jones ending lower. Cautious earnings reports from tech giants like Meta and Microsoft caused significant fluctuations in growth stocks. To date, 42% of S&P 500 companies have reported Q3 earnings, with an average growth expectation of 5.1%, sustaining a positive outlook despite market volatility. Job data showed signs of weakness, with only 12,000 new jobs added in October, the lowest since 2020, influenced by hurricanes and labor strikes. Manufacturing activity continued to slump, hitting a 15-month low, as capital investments softened amid policy uncertainties. In bond markets, 10-year Treasury yields rose to 4.37%, reflecting persistent inflation concerns. European stocks, led by the STOXX Europe 600 index, experienced declines as geopolitical tensions and weaker corporate earnings weighed on sentiment. The eurozone demonstrated resilience, with 0.4% GDP growth in Q3. Germany avoided recession with 0.2% growth, while France posted solid performance and Italy stagnated. The UK's FTSE 100 slipped amid bond market instability, following the Labour government's budget announcement, which detailed plans for higher borrowing and spending to counteract weaker growth forecasts. Japanese markets advanced, with the Nikkei 225 rising 0.4%. Market support came from the Bank of Japan's steady rate stance, though Governor Kazuo Ueda hinted at potential rate hikes. Political uncertainties surfaced as the ruling coalition lost its lower house majority, which impacted the yen. Japan's 10-year government bond yield remained stable at 0.95%. Chinese equities declined overall, with the Shanghai Composite and CSI 300 indexes down, despite positive economic data showing factory expansion for the first time since April. The property sector saw a 7.1% increase in new home sales, driven by China's recent stimulus measures. Improvements in manufacturing and services activity hint at early recovery signs, though challenges persist. As we look ahead, several major events are set to shape global market movements this week. The October jobs report will provide crucial insights into the US labor market. Market participants will watch for trends in employment growth, wages, and labor participation, which could influence the Fed's policy stance as inflation pressures ease. Midweek, US elections may introduce some market volatility as investors assess potential policy shifts and economic impacts. While markets typically respond moderately to election results, any surprises may affect sentiment, particularly regarding fiscal policy. The ISM Services PMI for October will shed light on the services sector, a crucial part of the US economy. This data offers insight into consumer demand and business conditions, Retail sales data for September will reveal trends in consumer spending across the eurozone, a key indicator of economic resilience amid moderating inflation and growth. Japan's leading economic index for September will provide early indications of growth momentum as the BOJ monitors economic activity in a cautious policy environment. China's October trade data will offer insights into export and import trends, key to understanding demand for global goods and potential signs of recovery. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.